Hey guys, Chuck Barone here. Monday, August the 8th, 2022. I'm glad to be back at my desk today. I apologize for having to call in sick on Friday. I've been under the weather for a little bit here. I was trying to get myself well, but I knew I had to get on board today to give you guys some important information. I want to, like always, thank everybody for their support for the channel, for watching the videos and everything you guys do to keep the channel going. Expressing your interest and your thank yous and all of your comments and questions and shares and likes and everything you guys have done for the channel. We're extremely, extremely grateful. In the markets today, guys, kind of a choppy day everywhere. Stocks were mixed today with the Dow up marginally, the S&P and the NASDAQ down marginally. I think that stock markets are going to wait for some of this data coming out this week. There's a lot of important reports coming out. It's going to kind of set the direction for this market for the next little bit until the next giant batch of data comes out. The bond market today, still the craziest bond market ever. The 10-year at 2.76, almost 45 basis points lower than the 2-year. I got to say, guys, for the life of me, if I have $1,000 and I want to buy a U.S. bond, first thing everybody wants to look at is how much will I earn on it, right? So you have a higher yield, and you have a shorter term to maturity. For the life of me, I cannot understand the demand for 10-year bonds unless it's some outside force. I seriously doubt this is the public, even real investors. I'd have to know why they're wanting the 10-year over a 2-year with a 45 basis point jump. It's just the craziest ever. The dollar today, down marginally at 106.39 on the index. The dollar as it stands right now is still the boss. There's not a lot of competition from other currencies. Japan's interest rates are at 0. The European Union's interest rates are at 0. Canada, even if they really continue to raise their rates, I doubt their money would be a competition for the dollar. So I just don't see anything that's really going to come along here to tank the dollar until some of these other currency countries start to raise their rates to get a little bit more in balance with what the U.S. Fed's doing. Metals today, kind of a mixed day. Gold was up today at 1790. I think now, you know how the market tends to work. Round numbers tend to become resistance or support. So let's see if gold can build up enough momentum to break through 1800 and stay there. I think that becomes a natural resistance number now. A lot of contracts for futures and options are written in those even numbers. Let's see if the gold market can keep going and break through that 1800 number and stay there. That would be a very, very positive sign for gold. Silver up today, actually had a decent day, up almost 3% at $20.75 per ounce. Silver had a nice little rally, got over that $20 resistance, and has managed to hold its own. So I think that as it consolidates above $20, get ready for another rally coming up in silver, unless something dramatic happens with the dollar. Oil today, the West Texas Intermediate closed at $90.76 per barrel, up about 2%. I think a rally was due in oil. It kind of got pummeled, beaten up pretty bad the last couple of weeks. We know what the production numbers are. It's all on speculation now on what demand is going to be. Natural gas was down pretty substantially today, almost 6%, at 758 for their million BTUs. I think that natural gas is still strong, guys. This whole Russian threat, I don't believe it's going away. The Germans are actually telling people they may have to burn wood this winter. We're going back, now it's not even cold. Now people are going to light their fireplaces and burn wood. I don't know if that's a positive thing for our society, guys. Bitcoin, 23,800. It's consolidating pretty strongly above 22,000. I think, technically speaking, Bitcoin is looking pretty strong right now. I think that some people who've been sitting on the sidelines and could have got in at 19 or 20,000 are kicking themselves right now. It looks like Bitcoin's ready for a little bit of an upside. Before I move on to some important data today, I just want to talk briefly, because I was out on Friday on that gigantic jobs report that came out. It was a shocking number, not only to me, but to every economist in the United States. And they're expecting 250,000 jobs to be created. A really shocking upside would be 300,000. I mean, to have it come in at 528,000 was just mind-blowing, at least to me. I really expected the numbers to start getting weaker. We've been hearing nothing about companies hiring, only about companies laying off positions. And I just got a little bit of skepticism about this, guys. I really do, because, okay, let's look at it like this. If you have a person working and he's producing 1 unit per day, just to use easy figures. And now you add another person to that company and he's producing 1 unit per day. Productivity is up. Now you have 2 units per day, right? And somehow or another, even though we're adding all these jobs, the consumer or the GDP, the GDP is going down. I got to understand, was there some kind of productivity collapse that nobody's talking about? Are these productivity numbers wrong? Are these jobs just jobs that are, lower end jobs in fast food places or whatever, retail stores where there's not a lot of productivity gains in these hires? I got to admit, it's very confusing to me, because it seems like with that kind of growth in the job market, you should have pretty substantial growth in the gross domestic product numbers. I mean, productivity should be up. So that's a little bit confusing to me. I'm going to keep studying this data to see where this goes, because it's not really making a lot of sense economically here. Now this week, we have a very big week coming up for data. It's going to be a very important week. We have on Tuesday, tomorrow, this is a very important report coming out, the unit labor costs. This is one the Fed is watching very closely. As I've explained in several videos in the past, wage growth tends to be very inflationary in the economy, especially one that's already inflationary. It starts what they call the wage price spiral, where as wages go up, companies raise prices to match those wage gains, and it just starts this spiral that once you're in is very difficult to get out. Labor costs have been going up, even though jobs have too. This is all very inflationary for the economy, and it's going to be interesting to see tomorrow what those numbers look like, because that will be a significant indicator for what's going to happen with Fed rate hikes coming up in September. On Wednesday, a very big data day coming out. On Wednesday, we got the CPI numbers. They're expecting 8.7% increase year over year versus 9.1. They're expecting the core number to be 6.1% versus 5.9 last month. Most of this decline is certainly going to be oil. Usually that's one of the big drivers to the upside. And this time, in this month's report, the Fed gets a little bit of a break. The number's going to come down, and get ready to hear a whole bunch of these talking heads coming out talking about inflation has peaked, inflation has peaked, inflation has peaked. I'm going to reserve judgment on that, because if these employer numbers keep going up and the cost of labor keeps going up, I don't think that 9.1 is going to be the peak of it. Also that day we get the mortgage bankers index. That's a big one. That's going to talk about the real estate market, loans and mortgages. They're actually expecting that number to be up, which I got to say would be a big surprise to me, because that happens to be what I do every day for a living. And I got to tell you guys, our office here is literally crickets. Nothing's happening. I have borrowers who don't want to buy. They can't stand these payments. Even with mortgage rates coming down from a peak of around 6%, the payments are still way too high for these people. Mortgages, as I've been telling you guys, have been correcting, or real estate has been correcting already. Here in Las Vegas, the median price is down almost $20,000 from its peak. And I'm seeing a lot of that starting in some of these other red hot areas, Boise and some places in Florida and other places are really starting to gather steam as far as the correction in real estate. Also, we're going to get on Wednesday wholesale inventory numbers. And this has been a big concern because a lot of these companies are holding way more inventory than they like. I've heard a couple of big stories about it, Walmart and Lowe's particularly, who are going to be having big fire sales to try to eliminate some of this inventory, excess inventory they have. They're expecting inventory growth to go up 1.9% from last month versus 1.8% growth last month. On Thursday, we'll get the initial jobless claims number. That'll be an interesting one to see in the face of the employment numbers last week. And we'll also get the PPI numbers, which is a forward indicator of where consumer prices will go. Both of those numbers are expected to be higher than they were last month, forgive me. Another information we need to pass along today, now the big speculation is on what will the Fed do in September. They feel like a lot of people are saying that the economy is not in recession and pointing to that jobs report. And I got to admit, that jobs report was quite a stunner, and everything else in the economy just feels crappy. I don't know about you guys. Maybe it's just because I'm in mortgage and we're kind of getting hit the hardest. But even places I go, restaurants aren't as full. The shopping mall I was at, I bought a pair of shoes, was basically empty. It just doesn't seem like people are spending money except on the stuff that they absolutely have to buy, which is not a bad thing, by the way. But I think that it's going to be interesting to see what the Fed does. These inflation numbers tomorrow are coming out tomorrow or next Wednesday and Thursday, forgive me, are going to be important. That labor unit cost number and how they move into September with it. I think the Fed's in a real pickle here, guys, because these inflation numbers are horrifying to them. But the economy, is it an inflationary boom? Is that even possible? Anyway, I read an interesting article today, which I think is kind of laced with a little bit of bullshit, about consumer inflation expectations. I guess most consumers, unlike me, are feeling like inflation is going to get better. The majority of the median number said they expect inflation to be 6.2% 1 year from now, which is down from 6.8% just last month. And they expect 3.2 3 years from now, and they expect 2.2 5 years from now. So consumers are indicating they expect it to take 5 years for the Federal Reserve to get their inflation number back to its, or even close to its 2% target. I think that's a reasonable expectation. I just don't know if, rates are going to be able to, does that sound like a consumer number to you? 6.2, 2.2. Don't most consumers kind of go by 2s and 2.5s or 3s and 3.5s? This just seems kind of a rigged number to give people the idea that consumers are feeling better about inflation, which I haven't heard anybody that is, and trying to create, with their power of propaganda, trying to create the idea that things are getting a little bit better. A couple of interesting little things before we sign off today. Citibank came out today and said that the Federal Reserve would certainly be justified in raising interest rates by 1 full percentage point in September. Because of that stunning jobs report, they know that's going to be inflationary. I don't know if the Fed will have the stones to do that, but I think it certainly increases the odds of another 3/4 point increase, which would bring that Fed funds rate around 3.10% roughly. I think that that's getting closer to what they would call the neutral rate, where it doesn't either hinder or promote economic expansion. We have a lot of really interesting things coming up over the next couple of weeks and months in this economy. It's going to kind of tell us all a little bit about how Christmas is going to be this year. Americans borrowing very, very heavily right now, added over $40 billion in debt in June alone. $40 billion in debt in June alone. And I might add that this does not include mortgage debt. This is revolving debt, credit cards, non-revolving cars, student loans. That is a very, very big jump It's huge, 40 billion in 1 month. Credit card balances rose by 16%. Consumers are taking on more and more debt. The debt trap just keeps swallowing more and more middle class people into it. As I've been telling you guys since we started this podcast, let me go through it all again. Save your money and put together your emergency FU fund. Try to get up to $25,000. Invest your money conservatively. Now's the time for value and protect your principal amount, not to reach for growth. Even though the markets have been sizzling the past couple of weeks, I still believe we're in the right position here, and you wouldn't have done terrible with what we've been recommending. I've been suggesting that you spend your money cautiously. Buy the things you need to, but those things you can buy that are more of the, do I really want this or can I save the money kind of thing, please save the money, guys. You're going to be glad you did later because you're going to pay for something now that's going to be worth less down the road, as everything's going to be on sale at the end of this big recession. We've also been suggesting that rather than adding on a ton of debt, you do everything you can do to not add additional debt if you can help it, to chip away and pay down the debt you have. Even if it's a $10, $20, $50, whatever you can afford, pay that debt down, get rid of that debt as much as you can. A debt-free life is the only way to live, guys. Having debt and a lifetime of payments for stuff, and a lot of times people are buying stuff they don't need or really can't afford, going in debt for that. But this debt's a little bit different. You're buying food and gas. I understand that a little bit, but do what you can, guys, to get yourselves in a position where when this storm starts really shrieking around, you're going to be okay in it. That's all we got for today, guys. I really appreciate your support. Remember to hit the like button if you appreciate what we're doing here. Share it with your friends and your subscribers. Ask questions in the comments. Don't forget, askchuckbarone@gmail.com. And of course, if you haven't already, subscribe to the channel. I appreciate your guys' support. I hope the information we're passing along to you is useful in your investing. Until tomorrow, guys, take care. Thanks.